Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Hi, and welcome to Wall Street Wrap-Up, and hope your week went well. My name is Andre Laborde. Our goal is bringing Wall Street to your street for this Friday, February 26th, 2021. Our goal is to inform you of what happened in finance this week to get you better prepared for the events of next week to come. And speaking of coming up tonight, we'll be talking with John Hofmeister. And John is the former president of Shell Oil and founder of Citizens for Affordable Energy. It's a nationwide nonprofit group. And we'll be discussing the oil and gas industry, the Texas freeze, the closure of the Keystone Pipeline. And he'll be with us tonight. But first, how did the markets do this week? Well, the Dow Jones closed the week at 30,926 points. That was down 474 points for the day and down 1.8% for the week. The S&P 500, they closed at 3,810, down 18 points for the day and down about 2.5% for the week. And the NASDAQ, they finished the week at 13,192, up 73 points for the day and down just about 5% for the week. Of the three indexes, the Dow, the S&P 500, and the NASDAQ, all three posed a weekly loss. And the NASDAQ posed its worst week in 4 months, but all three indexes posted a monthly gain. Well, let's get to our guest tonight. John Hofmeister is retired as president of Shell Oil and founded the nationwide nonprofit group Citizens for Affordable Energy. As president of Shell, he was always known as a straight shooter and is willing to challenge his peers in the oil industry. He's also the author of the book, Why We Hate Oil Companies, and he's with us tonight as our guest. John, welcome to the show. Glad to have you with us.
Thank you, Andre. Great to be with you.
Well, first off, I need to ask you, are you okay? Because I know you're living in Houston, Texas, and you had such a problem last week with the freeze. How were you, your family, and people that you dealt with in Houston doing right now?
Nature really threw us a curveball, and it was when we missed. We tried to hit that curveball, and we missed. The entire state missed, Andre. It was bad news. We have tens of thousands of people in Houston who are living in Katrina-like conditions. While their power may be restored, they don't have water, and they have a boil water order. And across the state, it was misery compounded on top of misery. When the power went out, the water went out. When the water went out, cable, internet, everything else went out. So the state was really cut off last week. And here's the issue. This was a man-made problem. Nature's going to do what nature does. Mm-hmm. What man is supposed to do is to create a resilience in the infrastructure, a capability in all the infrastructures to be able to withstand whatever nature throws at it. And Texas proved that it wasn't ready. It wasn't up to speed. Now we got to fix it.
Yeah. Didn't Texas have a similar situation in 2011? Or 2010?
2011, mm-hmm. 2008. We've had multiple opportunities to learn a lesson about what nature can do to Texas, which is generally it's a hot weather state. And we're in good condition for hot weather. But we can also get cold spells. And we were not weatherized. We were not really robust in terms of resilience to withstand cold weather. And we've had multiple warnings. The problem with Texas energy governance is that it didn't pay attention to the signals, and the legislature and the governor deserve full accountability for this because they failed us. Mm-hmm. The legislature had multiple opportunities to stiffen the back of the Public Utilities Commission with regulatory authority and with a commitment by law to force a level of weatherization, which was never done.
Yeah.
They put out a list of best practices and said, here's the best practices. Well, but there's no way to pay for the best practices. They didn't authorize any methodology to bill the customer base for the costs of putting in best practices, like weatherization, like some kind of redundancy, like heating systems around pipelines and so forth, which were part of the problem. And so we just really failed all across the board. There's nobody smiling today about last week.
I understand. Did the legislature and the governor's office just abdicate by throwing the power to ERCOT? And ERCOT was basically their board of directors. None of them lived in Texas. They lived outside of the state.
It's a big mystery to the people of Texas to realize that much of the reliability council members, where did they come from? They're not Texans. Mm-hmm. They don't live here. They're not going to experience the downside, and so it's shameful, really, what has been, I think, a miss on the part of our elected officials. And now I hope they're going to be held accountable for it.
Yeah.
Because they are the ones to blame. It's not just picking on ERCOT that's going to fix this. It is the entire legislative assembly, and it's the governor and his staff that let it drop. I mean, who appoints a Public Utilities Commission, which didn't do its job? And the Public Utilities Commission oversees ERCOT. And so all of this is very much up in the air. Fortunately, the governor has made it an emergency item in the current legislative assembly that's taking place now. We are seeing hearings taking place this week already. So maybe we'll get something out of this and we'll fix it going forward.
Yeah.
Every source of energy failed us last week.
Yeah. I was kind of surprised that when I heard that 23% of Texas energy comes from wind and solar. And you're talking about Texas as probably the energy capital of not just the country, but maybe of the world almost, because of their oil and natural gas. I use the example that's like starving to death in the middle of a grocery store, and having oil and gas.
It's a very good analogy, and you're absolutely right. $36 billion in the last 20 years has been poured into building up wind and solar in this state. And that $36 billion resulted in no energy for the last week. It was dead shut down, wind and solar. The solar panels were covered with snow, so they didn't work. And the wind farms froze up because they weren't weatherized. But in addition, pipelines froze and the gas couldn't be moved. Wellheads froze and the gas couldn't get into the pipeline. We also had, half of the natural gas plants in the state shut down. And that's like 150, 175 plants just shut down overnight on Sunday night and to Monday morning. They just went offline within minutes of each other. And what we almost saw happen was the entire grid just about blew up because of the gap between the demand and the supply of electrons, which the equipment would just basically crack wide open. And we'd have to replace the equipment that moves the electrons. And that would have taken months where we'd be out of power. So ERCOT did its job in that regard. Mm-hmm. They managed the flow to match the supply and the demand. And you can't fault them for that. That's a hard job to do, especially when you don't know what's going on around you, other than by phone calls and a feel for it and all the recording equipment that they've got to adjust. But they took enough demand off the system with blackouts that we could keep the system viable.
I understand. Well, what about, I can understand lessons learned, what happened in Texas. I understand now that we're talking about closing the Keystone Pipeline. We're talking also, and I'm talking about the new administration is also interested on halting all new drilling on federal lands. And in addition to that, all existing leases. And whenever they say we're going to review the existing leases, that doesn't always bode well for the lessee when you're going to review the lease of existing oil wells. What do you see happening for the next couple of years?
When you think about what leadership does, leadership has a choice to make. When leadership chooses to start shutting things down, when leadership starts taking things away, when leadership starts making it impossible to sustain what's necessary to keep things going, you have to really question that leadership. My brand of leadership is about building things up, not shutting things down. Before you shut things down, you'd better build things up if you're going to have a sustainable system. And so when I see the Keystone XL pipeline shut down on day one, here's the so-called infrastructure president shutting down a multi-billion-dollar infrastructure project for no good reason. Given the fact that for 10 years, this pipeline company has been keeping its customers in line because they wanted to see this pipeline, because the next 10, 20, 30 years of moving oil out of Canada into the United States for the benefit of American consumers is a reality. And Obama played games with the Keystone XL pipeline, and on day one, President Biden shuts it down. That's playing with a hammer, using a hammer for a tool. Just break it. And then with the freezing of leases and so forth, the collateral damage is just extraordinary. And what will happen, I can guarantee what will happen is we will slowly see our prices go up for fuel. And all the American people across the country who got used to $2 and say 25-cent gasoline or lower, or maybe a little bit higher, get ready for $3.50, $3.75, because that's where it's headed on the basis of the early signs of and it could go up from there, because we're going to see just a lack of interest on the part, not just of the president, but his appointees and the next 2 or 3 levels of appointees in the administrative organizations like the Department of Energy, the Department of the Interior, the Department of Transportation. And they're all going to take on board this, we don't want fossil fuels anymore. And it's easy to stop producing fossil fuels from Washington, D.C., or from state capitals, but it's awfully hard to fill gasoline tanks when you don't have the licenses or the ability, and you don't have an alternative. Electric vehicles, I believe in, I support, but it's not an immediate alternative. We don't have the electric battery supply chain to make electric vehicles. We don't have the hydrogen fuel cell supply chain. Let's build the supply chain before we start cutting off the fuel supply. And that's what I worry about, is if we get the balance wrong, this is going to be a short-lived administration. Well, also, and the good news is every 2 years there are elections where the American people can express themselves on how they think the administration is doing.
Also, John, I'm thinking, too, is that right now you hear in the news quite a bit of electric vehicles. Well, those EVs have to be charged in overnight. Well, that takes power and energy to do the charging. So it sounds great when you have an automobile that's an electric vehicle that runs throughout the day, but everybody is charging their vehicles overnight. Where is it going to be? Where is the energy coming to get charged? The fuel cells.
And we will not be able to charge tens of millions. And there's 250 million cars in this country. If they're all replaced by electric, we don't have enough power generation in this nation to recharge electric vehicles unless we build lots and lots of new capacity of power generation. And if people are counting on wind and solar as the primary, well, forget solar at night and forget wind when the wind doesn't blow or blows too hard. We need a sustained grid made up of multiple sources of input, and whether that's coal and natural gas and nuclear. I've been speaking for 10 years, 12 years now since I retired from Shell, on the need for a holistic, a comprehensive approach to energy, not a tactical, we'll stop doing that, and then we'll start doing that, and we'll see how this works, and then we'll try something else. Where's the plan? There is no plan, Andre. That's been the case from Richard Nixon to the present. There is no plan. No president has put forward a plan. They've put forward tactics which don't work.
I'm also concerned, too, when it comes to EVs, because electric vehicles are right now the big thing on people's minds. But when it comes to the batteries, the components of the batteries, 80% of the lithium battery component comes from China. And I would not want to be really that beholden to a communist country with 80% of the products that I have to have. It doesn't make sense.
Fortunately, there are some efforts underway, and for disclosure purposes, I'm on the board of a company called Ioneer. Ioneer is going to develop, if we get our permits, a lithium boron mine in the state of Nevada. Could be the biggest in North America and the lowest cost lithium available in the marketplace. And that's what we're working on. And fortunately, this is good news. Good news is the Trump administration and the Biden administration are both focused on strategic supply chains for the future of American availability of rare earth minerals and many other, like medical products and other electronic components as well. We've got to get the strategic supply chain straight. And fortunately, the handover from one administration to the next, I think, will be pretty seamless in that regard. And so the effort to build that strategic supply chain for things like electric batteries or for computer chips, that's underway. And I feel good about that.
Yeah. John, I'll tell you what, we're going to take a break on some good news, and that is good news. We'll take a break. We'll be right back. We'll have more with John Huffmeister and with more about the oil and gas industry right after this. Thank you and welcome back. We're talking, if you're just joining us, with John Huffmeister. John is the former president of Shell Oil, and we're talking about the oil and gas industry. John, with the remaining time we have left, I'm concerned in the area that we're broadcasting. We have a lot of viewers in the oil and gas industry, and whether they be E&P, exploration and production, or refinery, the health of the small independent oil and gas companies. What do you think oil has to be at for the independents to survive?
Well, I think 60 is a minimum. 70 and 80 is better. Here's the issue with oil and gas. It's a long-term business. It doesn't live quarter to quarter or even year to year. You need to have a roadmap for the level of investment that you're going to take in the 2, 3, 4, 5-year period ahead of you. If you're dealing with low oil prices in the 50, 40, 30 range, you really can't plan ahead very well. You're operating on thin dimes, nickels and pennies. And what you need for capital is lots and lots of capital for future investments and future expenditures.
I can understand, because I can think of, like, in your position at Shell Oil, or whether you be at an independent, before you plan a multi-million-dollar offshore rig or even an onshore, you have to know for a year in advance, 2 years in advance, of what oil may hopefully be to be able to make that plan to be viable, right?
Yes, it is. And the oil companies despise the volatility of price. They don't like high prices, and they don't like low prices. They like sustained medium range prices, because that tends to be what they base their business model on. They do have a high-end scenario. They do have a low-end scenario. And what you're hoping for is some consistency, something that's in the middle range, where you can pay back your capital, reward your shareholders, and put a little money aside for the next multi-billion-dollar project.
John, we've got about 30 seconds left. Got a question for you about the independents. Do you foresee that there's going to have to be a lot of mergers for the survival of many oil companies today, with debts coming up?
If the Biden administration puts serious controls that prohibit new leases, yes. There's not going to be enough work to go around for the existing companies. and they're going to have trouble. They're going to have to amalgamate, merge, acquire, and give up, their independence. I think there's going to be a lot of rationalization in the industry across the board, the big guys as well as the little guys.
John,
if access is prohibited.
John, I've got a lot more questions, but I'd love for you to come back because I very much enjoyed it.
Love to.
Thank you, John.
Thank you.
Appreciate it. That's John Huffmeister. We really appreciate it. Former president of Shell Oil. Well, in business news this week, Federal Reserve Chairman Jerome Powell underscored his determination to return to the U.S. labor market to full strength. Speaking on Tuesday to the House Financial Services Committee and then on Wednesday, the next day, to the Senate Banking Committee, he said the central bank will not begin to tighten easy money policies until it sees much more improvement. Jerome Powell said that the Fed doesn't foresee raising its benchmark Fed's fund rate from near zero right now until three conditions are met. A broad range of statistics indicates that the labor market is at maximum strength. Number two, inflation has hit its 2% target. And third, forecasters expect inflation to remain at that level or higher. He also said these goals are likely to take some time to achieve. Well, this is complete opposite course reflected even from last August when it made a major shift on how it sets interest rates. You see, because for decades after the high inflation of the 1970s and early 1980s, the Fed lifted interest rates whenever unemployment fell to levels that economists believe would cause wages and prices to rise too much and too soon. Well, GameStop again shot up this week, settling today at $102.85. That's almost a $55 rise for the week. Charlie Munger, the 97-year-old business legend and BFF of Warren Buffett, criticized the momentum trading of novice investors that were lured in to the new types of brokerage operations like Robinhood. Munger said he thought all this type of activity is regrettable and civilization would do better without it. When asked his thoughts on Bitcoin, Charlie quoted a line from Oscar Wilde to describe Bitcoin. He said, "Fox hunting is the pursuit of the inedible by the unspeakable." By the way, the actual quote is "Fox hunting is the unspeakable in pursuit of the inedible." But you get the point. Another person asked Munger whether he would allow Tesla's lead and put Bitcoin on the balance sheets of Berkshire Hathaway. "We will never. Since I never buy gold, I never buy any Bitcoin, and I recommend other people follow my practice." In the meeting, Munger delivered plenty of other burns and digs at cryptocurrency. Munger said investment bankers, they'll sell, fertilizer as long as fertilizer can be sold. Fertilizer is my own choice of words, as well as brokers like Robinhood. He called it a dirty way to make money. Now, back in 2018, Warren Buffett called about Bitcoin, called it probably rat poison squared. And Munger called it, let's say fertilizer again, but also cited similar reasons for not liking gold. The fact that there are better things to invest in. At the time, Bitcoin was worth $9,800. It's now over $49,000. Warren Buffett in 2018 at his annual meeting was asked about the cryptocurrency, about Bitcoin, and he said, "I think every time you buy a non-productive asset, you're counting on somebody else later on to buy that non-productive asset because they think that they too can sell it to somebody else for more money. It does come out bad at the ending." The FAA has grounded all Boeing 777s with Pratt & Whitney engines on Thursday. The FAA stated before further flights, an inspection would occur on each one of the fan blades of Boeing's 777s with the Pratt & Whitney engines. The cracks are occurring on the insides and are not visible to the naked eye upon inspection, but by thermal acoustic image inspecting. That's according to FAA Administrator Steve Dixon. Dixon said it takes about 8 hours to inspect each blade, and each engine has 22 fan blades in it. According to Dixon, this will take some time, but each inspection may uncover even new questions. Now, there are 24 aircraft from United Airlines in service that have the Pratt & Whitney engine, in addition to 28 planes that United Airlines have parked due to the pandemic, which gives it a total of 52 planes in all to be inspected. Investors don't seem so enamored of electric car maker Tesla anymore. Shares in Tesla plunged in the red for the year on Tuesday, hit by a broad sell-off of high-flying technology stocks, the fall of Bitcoin, in which the electric car maker recently invested $1.5 billion of Tesla's cash reserves. The firm, led by Elon Musk, has had a stellar ride since 2020, in which it began at about $85 per share before reaching the $900 mark on January 25th. The stock dipped as low as $619 on Tuesday this week, a 33% drop from the $900 mark, and went into bear territory. Well, Bitcoin has also swung into a bear market, falling from a peak of $58,354 on February 21st to a low of $45,000 earlier on Tuesday. A German-based trader said he was taking chips off the table on Tesla as its $1.5 billion investment in the cryptocurrency could backfire now. And speaking of now, if you've got a question about finance or a comment on the show, well, we'd love to hear from you. You can write us at www.wallstreetinfo.org, and keep it pithy, keep it concise, and we'd be glad to answer your questions. And now for a look at what's ahead this week. Well, and finally, when it comes to Mr. Potato Head, Hasbro, who has been having Mr. Potato Head since 1952 for almost 70 years, is now saying that because of the genders, they are getting rid of the Mr. and Mrs. Well, no, they're not getting a divorce, only questioning their genders. The public outcry on social media was swift this week and heard the toy maker and now Mr. and Mrs. Potato Head, but they'll keep their titles of Mr. and Mrs., but not the outside of the box. They'll be just named the Potato Heads. Well, it's very concerning. Of course, I bet if Mr. Goodbar certainly wouldn't want to give the Hershey kiss to Swiss Miss. Well, that's our show. We hope you've enjoyed it, and we've enjoyed it for this Friday, February 26th, and we thank you for inviting us into your homes this evening. We'll be back next week. Remember, you can follow us on Facebook and WYES.org. So thank you for joining us for Wall Street Wrap-Up. I'm Andre Laborde. Remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.